Hello everyone, it's Any, aka The Not Trader, and I'm back again with another video. Now today I'm here with a video that everyone's been waiting for. Now this is a video on Trading 101. So what that is a beginner's guide to trading. I made a lot of videos showing all of my trading strategies with lots of different lines and graphs and peaks and troughs and exponential moving averages and simple moving averages, and that can be quite daunting for people that are just starting out trading. So this 10-part series is really going to showcase how to start trading from the ground up. I want to cover all the fundamental things you need to learn before you even open an account. So before we get into this video, can you like, share, subscribe, all of that stuff, and please leave a comment on any questions you have on this video. The more comments I get and the more questions I have, the better I can make the videos going forward. Thank you, and let's get started. So in this Trading 101 series, I want to go through what is trading, the market participation, what moves the market, what spread betting is, the trading platform that I use, and market order limits and stop losses, margin and leverage, and market trading hours. But for this video, I'm going to focus on what is trading. So what is trading? That's the question. Trading is all about buying securities low and selling high, which is also known as going long, or selling high and buying low, which is known as going short or shorting. And the main idea is to make a profit, because that's the reason we're in the game for, to turn a profit. Now when I talk about securities, I'm talking about any sort of tradable financial assets or financial instruments. And what that means is that could be a stock, ETFs, forex pairs, cryptocurrencies, basically anything that we can trade on the stock markets. There's four main ways of trading. Day trading, which is all about buying and selling within the same day. There's swing trading, which is all about using technical analysis to buy and sell based on the price changing direction. Now this is the strategy that I use, and if you look at any of my pick of the week videos, you'll see the strategy that I use to swing trade. Now, rather than talking about it, let me just cut to one of my swing trades so that you can get a better look as to what I mean when I talk about a swing trade. Hi everyone, this is just a short video explaining to you a visual representation of a swing trade. Now as you can see here, I'm on the daily chart, and I plotted a couple of lines here just to show the patterns that have been forming over the last couple of months and years. So this goes back to about 2017. Now from January 2017 up until about just a few months ago, there was a obvious pattern forming. So it would drop down to the support, go up to the resistance, come back down as an ascending channel pattern. So it was following pretty much the same channels. Now the market started becoming bearish around October, and as we can see, the price broke pattern at around November, and then started creating a new pattern where it was a descending pattern. Now I created these two blue parallel lines to show the descending channel that was forming, and at these 3 points you can see it would drop whenever it hit this resistance, and so I predicted that it would do the same again here. So it dropped here when it hit the resistance, hit this point here, and lo and behold, it dropped again. So this is just a prime example of a trade that I would have taken if I wasn't already in another trade. So if I drill down a little bit more, it's just a prime example of a swing trade. Hits a point where you think it's going to change direction, and then I would short it. So I'd short it at this price, and it would go down, and I'd short it down to whatever price I'd want it to go down to. So so swing trade is all about catching a price action movement when it's about to change direction and capitalizing on that for profit. Anyway, back to the Trading 101 tutorial. Scalping. Now this is probably one of the hardest strategies, I think, in my personal opinion, because it requires a high level of attention to detail and also to be alert at all times, because scalping involves making profit off of several small price changes over a short time frame. So you could be trading with tens of thousands of pounds, maybe hundreds of thousands of pounds, and only trying to make profit off of maybe a 10 to 20 to 30 pip move. And when I talk about pips, I'm talking about point movements, but I'll explain what pips are later. Actually, forget that. Let me give you the definition of pips now. Does that make sense? If not, we'll cover it later. And with scalping, it's probably easier to show you than to tell you. So I'm going to cut away again to a video of me scalping. I'm going to do it on a demo account because I don't like scalping with real money because I lose money when I scalp. So I'm going to show a video of me scalping with my demo account just to give you an idea of what I mean by scalping. Okay, so I've decided to scalp the euro dollar GB pound pair, and what I saw was that I saw opportunity for a trade as the price started converging, as it formed a converging wedge. So it went from big to small. When I plot the lines on the graph, you'll kind of see what I'm talking about. But the idea is to make a little bit of money off of very small price movement. So I've decided to trade £1 per pip on my mobile app, for IG mobile app, and yeah, so I've set a 4.5 pip stop loss and a 4.1 pip limit order. So that's where I'll take the profits. So scalping is all about just making profits off small margins, as you can see. So this wedge formation I've drawn up here shows that as it converges towards the point, the price has to make a decision whether it's going to shoot up or shoot down. So as we come closer to that point on this 1 minute chart, it will decide whether it's going to go up or down, and then it will either stop out for my stop loss or make a profit. So I just need to wait up until it makes that decision, and then a profit or loss will be made. So that's kind of a breakdown of what scalping is about, really. And we're back. Okay, now investments. This is probably the one that most of you know about. So this is all about buying shares in a company with a long-term view of making a profit. So while some of these other strategies may take a couple of days, maybe a couple of weeks, investing is all about buying and holding a financial asset to maybe sell in a couple of years' time, maybe a decade's time, because you see intrinsic value in what you're buying, and you think it's going to increase in value over time. And you don't only make money through selling the financial asset at the end of the time holding it. You can also make money through dividends, which could be paid out quarterly based on the performance of the company. There's three main types of trading. And there's CFDs, there's share dealings, and there's spread betting. Just a little caveat: CFDs and spread betting are not available in the American market. Sorry, Americans, but yeah, you got strict laws when it comes to gambling. So, and spread betting is the strategy that I employ. You could do your own research on CFDs. I'm not going to cover it because it's not something I do. Share dealings is buying and owning shares in a tradable financial security. So that's actually owning a share of a company. Kind of as I explained in the previous slide about investing. Spread betting is betting on the direction of the price of an asset. So you do not own the underlying asset, but you bet on the direction of its movement. And unlike share dealings, you make money off every point movement rather than percentage growth. But I'll go into that in a bit more detail later. There's two main types of trading analysis. Well, there's actually three. There's sentiment analysis, but I'm not going to go through that because I do not see any value in learning that, as I never use it, and it's so subjective that it's not really worth my time explaining. If you want to look it up, yeah, just Google it. Anyway, fundamental analysis. So fundamental analysis is all about analyzing the economic, the social, and the political forces that affect a stock. So we're talking about economic reports, news, events, industry statistics, anything that can affect a financial asset from a news side. And this is normally used by long-term investors. If you're trying to invest for the long term, this type of data is very important because this can dictate the how you value the company or the asset that you're trying to invest in. There's many indicators that you can use. I've named a few here: earnings, balance sheet, cash flow, fundamental indicators. I'm gonna But there's way more than that. You can even there's a lot of fundamental indicators that you can use. So there's PE ratio, debt to equity ratio. Actually, rather than me spelling them out, here's some on the screen now. And fundamentals do not change based on external news. Now, external news can affect technical analysis. Many times I've had a pattern that I thought was gonna go a certain way, only to find out Trump has tweeted something crazy that has affected the price and has sent a stock or skyrocketing or plummeting. So while technical analysis is useful, you still need to keep an eye on fundamentals, as it can skew the price action of a stock. Technical analysis is all about identifying patterns and trends by studying charts and price movement to predict future price movement. The type of traders that typically use technical analysis are swing traders, such as myself, day traders, and scalpers. It's all about looking at candlesticks, price action, and a lot of technical indicators such as the MACD, RSI, and simple moving average. These are 3 indicators I use myself in my strategy.